Welcome to Supply Chain Partners TV and podcast channels, where we discuss innovative services and strategies delivered by our members at Supply Chain Partners. Our members can help you to build a high-performing business and supply chain. I'm Dr. Sharyn Grant, and I've worked in logistics and supply chain field for over 20 years, and I specialise in strategic supply chain performance management. Let's now introduce you to our member. With us today is Trevor Wollard, the Director of Fifo Capital Australia. Fifo Capital is a private lender that helps Australian businesses to grow by providing invoice finance, supply chain finance, trade finance, and business loans when their clients need extra cash resources to achieve their goals. Fifo Capital is a valued member at supplychainpartners.com.au, which is a B2B marketplace where industry professionals can source expert suppliers for business and supply chain solutions. Welcome, Trevor.
Thank you, Sharyn. Great to be here.
Great. Well, today's episode is about supply chain finance and how it can support business operations and growth. I note that Fifo Capital has helped over 3,000 Australian businesses to access finance since 2007. What types of situations arise that require a business to need additional cash flow and working capital?
Well, as you can appreciate, Sharyn, cash flow is the lifeblood of most businesses. As businesses grow and deal with new suppliers and supply changes, their needs for extra cash resources often grow. So for a lot of businesses, there's a large disconnect from where they procure their items in the supply chain to when they receive their income from their clients. Fifo Capital aim to fill that gap through our innovative supply chain facility. As an example, a manufacturer might need to procure components domestically or internationally, and often they have to pay up front for these components. There can be a large period of time for a manufacturer to build their goods, ship to clients, and to be paid. All of this time, the manufacturer has to cover the cost of their components.
Thanks, Trevor. We know that the COVID pandemic has caused significant disruptions to supply chains. How has the pandemic impacted the financial situation at Australian businesses?
Very good question. As you know, and as you've said, the pandemic has caused significant delays to the supply of goods and services. A business needs to procure items and the supplier wants upfront payment. And any delay in the supply chain or receiving the goods can impact that business's ability to sell the goods and make a return. This situation extends significantly the time period from when a business first outlays its funds to buy the goods to when it can recover those goods through sales. The time period is also extended when these goods are purchased from global suppliers and when they're eventually received and used to manufacture products. The longer a business goes without earning a return on their investment, the harder it is for them to manage cash flow. The pandemic crisis has caused significant supply chain disruptions, and this has put a considerable strain on the finances of Aussie businesses. Banks have also tightened their lending practices, and suppliers have gone from giving terms to their clients to requiring payment up front.
Thanks, Trevor. The pandemic has definitely impacted our supply chains globally and locally. So what types of businesses does Fifo Capital help with supply chain finance?
It's quite varied. Typically, our clients range from turnover of around the $500,000 mark, depending on their cash flow or working capital facility requirement. We've helped major corporations right through to micro businesses. Supply chain finance has allowed our clients to pay suppliers and extend terms to us, which frees up their working capital to use as and when they require. And in some cases, we've even helped start-up businesses, but it's really dependent on the individual needs of that particular business.
Excellent. Thanks, Trevor. That's an excellent range of businesses that you can help. So let's now discuss one of your clients, a supplier of industrial lifts. Could you please let us know what supply chain financial issues that this client was facing, and how did Fifo Capital help this client?
Very good. This client, as I said, supplies industrial lifts predominantly to construction companies, large Australian construction companies. They purchase the main components of these lifts from overseas, and that requires a significant financial outlay. Like most overseas suppliers, the supplier requires a deposit and then a payment up front. But these terms don't unfortunately marry up with the client here in Australia, who prefers to keep their working capital here and pay only when the goods arrive. So that disconnect has caused and does cause a problem for many businesses. We're able to help this particular client by setting up a supply chain finance facility where we're able to pay for the supply of these overseas goods and have an extended period of time of 90 days, which allowed for the goods to be manufactured, shipped here to Australia, and then arrive here in Australia for the client to pay when they've arrived. That helped this particular client considerably because it allowed them to work within the constraints of the client's purchasing requirements here in Australia. We're able to quickly approve this supply chain facility as they met our lending criteria. Good turnover, solid suppliers, good relationships with their clients here in Australia. The client was able to pay their overseas suppliers, and in addition to that, it allowed them to take on more customers here. Our client was actually able to take on this existing supplier as well as additional clients here in Australia, beating out their Australian competition due to the fact that they were able to offer better payment terms to their Australian clients.
Excellent. You've provided an excellent example. So what were some of the key lessons that were learned, or what advice would you give to future clients seeking assistance with supply chain finance?
Definitely to plan ahead as much as possible. Having a facility available before engaging with a supplier can sometimes mean leverage when it comes to negotiating payment terms and pricing. The best case scenario is that a client can build the cost of our supply chain facility into their pricing of the goods that they are selling. We suggest that they speak to their accountant and talk about the benefit of using a working capital facility against using their own working capital, and also again taking into account what costs are involved and potentially building that into the end cost of their products themselves.
That's really great advice, especially about building the cost of the finance facility into the pricing of their goods that they're selling. So how are businesses using supply chain finance?
Well, as you can appreciate, a lot of businesses are struggling with working capital right now and cash flow. It can stifle business growth. Banks most likely require bricks and mortar security for a loan or an overdraft. Suppliers themselves are tightening up their payment terms, and there are delays in local and domestic supply chains, as we've just discussed. All these issues can severely impact a business in many ways. So having access to additional financial resources can mean better buying power. It can mean access to buying discounts. It can mean the ability to hold greater stock holdings, which means in turn to source and service a client quicker. Our clients see the opportunity to use our supply chain finance credit limit to broker better deals, and suppliers using early payments as an incentive as well. Other clients are using to extend payment terms out to 90 days from the date of the invoice, and that means they can get paid by their customers before they need to pay their suppliers, making their business run without the need for their own working capital. Even in some cases, businesses that employ subcontractors are actually using the facility to pay their subcontractors early. And that means if the subcontractors want to get paid early, a portion of the fee that we charge them to take their payment early, we actually share with our clients. That's a win-win scenario.
Thank you, Trevor. You have definitely pointed out some great benefits of using supply chain finance. Is your supply chain finance facility disclosed to your client suppliers?
No, our supply chain finance facility allows our clients to pay suppliers confidentially. So in that sense, it's undisclosed. We are actually the party that pay the supplier on behalf of our clients. And again, for all intents purposes, the client or the supplier doesn't know that the payment is coming from a financial institution. For new clients, we can provide funding in 48 hours. For existing customers, it's usually a couple of hours. The facility allows our clients to pay their suppliers on time, early, and extend their payment terms as they need. Most of our clients have reduced their operating working capital significantly by extending their terms beyond their customer payment dates.
That's excellent. So how does the supply chain finance facility work?
Very easy. Once the facility is set up, our clients simply upload their invoices to our online portal and indicate when they require payment. Our client is then notified, then they approve each invoice via our secure platform. We then pay the supplier's invoice on the requested date, and our clients pay us back per their agreed prior terms.
That's great. So what are the next steps a client should take if they would like to access your supply chain finance facility?
Yeah, feel free to look us up on the web at fifocapital.com.au. There's an apply directly option there on our website. Also, people can email me directly at trevor.wollard@fifocapital.com, or they can call me on 0419 223 627.
Excellent. Well, thank you very much, Trevor, for joining us today from Fifo Capital. It's been an excellent discussion.
Thanks, Sharyn. Really appreciated being able to discuss it. This is an important topic. Supply chain finance we've provided to our clients has been really integral to supporting their business. Our clients have been able to maintain their operations, keep their suppliers happy, keep goods flowing through their supply chain, and retain their customers as well as grow their business.
That's excellent. You've been able to keep our supply chains moving. Well, that concludes today's episode on supply chain finance for business operations and growth with Fifo Capital. You will find all of their contact details listed below. So join us again at Supply Chain Partners TV and podcast channels, where we meet with experts across Australia to discuss key business and supply chain topics, issues and trends, including logistics, supply chain management, technology, and much more. Be sure to click the subscribe button of this Supply Chain Partners channel. We look forward to you joining us again in a future episode.